Hi, I'm David Daly. I look after the Discovery Hub here at Worldline, and firstly I just want to warmly thank you for joining us for this session as part of the 2022 Financial Inclusion Week. So in a moment I'd like to share with you briefly some of the findings and some of the conclusions from our Payments Digital Divide survey, which we conducted towards the end of last year. And then I'm really delighted that I'm going to be joined by two guests who are going to share their views and their insights on this subject. So we have Karen Elliott, who is a Professor of Practice in Finance and FinTech at Birmingham University Business School, and Juana Ephraim, who is a lead editor at The Papers. So, as I said, in a moment I'll cover three of the key findings from the survey. So one of them is that there is this generational cliff edge when it comes to the preference for using cash. The second is a rather surprising truth about the role of convenience in payments. And the third is the impact that making payments more inclusive can have on wider financial inclusion. And then I want to go on to share some key conclusions for what the payment industry can do to make digital payments more inclusive. But before I go on to that, I just wanted to explain what our motivation was for conducting this survey. Many of you will already be aware of this concept of the digital divide. So that's the gap between the people who are benefiting from using new technology and ways of doing things, and those who are not benefiting from that. And of course, typically, as that group who are not willing or not able to adopt these digital ways of doing things, as that group gets smaller, they also potentially become more excluded and disadvantaged in society. And I suppose a simple example in the financial world is, as more and more people do online banking, use their mobile phones to do banking, then of course banks can reduce the number of branches they have, they can reduce their opening hours, but of course that actually then makes it harder and maybe even more costly for the people who still want to access their banking services in person via a branch. Now, what we were specifically interested in understanding more about is the payments digital divide. So what is it that leads some people to embrace digital ways of paying whilst others are preferring to stick with cash or even cheques? And what we were very aware of was that there is already a lot of data about how people are actually paying. And so what we focused on in our survey was how would people prefer to pay, which could be different from how they're actually paying, but also what drives those preferences? What benefits do they see with using one payment means versus another? Now, we had over 700 responses to our survey, including people right from Generation Z through to the silent generation, which is the people who are over 76. But of course we have to keep in mind that our survey sample, it wasn't designed to be representative of the wider population. And in particular, because we conducted this survey as a digital online form, we have to be mindful that probably the people responding were digitally, more digitally able than the general population. But even, taking that into account, there were some interesting findings. One of them was that we found this generational cliff edge in the preference of using cash. So in the survey, we asked people how they would prefer to pay online, how they'd prefer to pay in store, and also how they'd prefer to pay their friends and family. And what you see here is the percentage of each generation that chose cash for each of these scenarios. And when you look at online and in store, what you can see is where this idea of a generational cliff edge comes from, because it's really very, very low numbers in all of the generations except for the very oldest. Now, interestingly, when you look at paying friends and family, it's a more gradual shift, with the older generations having a preference for cash and that gradually tailing off until the younger generations are rarely choosing it at all. And we found this interesting because it does show that the youngest generation, the Gen Zs, are really setting themselves apart by rarely preferring cash for any type of usage. But the other thing I think it's important to note is that actually in all of the generations, there are still small percentages of people who said that they would prefer to use cash. So although you can see this generational shift and this cliff edge, there are still clearly people who want to use cash regardless of how old they are. And that conclusion is kind of further reinforced by what you see here. So another question we asked everyone was, would they be happy to complete all of their payments digitally? So completely abandoning cash. And what you see is that the younger generations were quite positive about this, but once you get to Gen X and the baby boomers and the silent generation, they become progressively less happy with this idea of going fully cashless. But still, again, in every generation, there are some people who don't agree with the idea of abandoning cash. Now, as I mentioned earlier, we were interested in this survey to understand really what's driving people's payment preferences. And so for every payment means like cash, debit card, mobile payments, we asked people what benefits they associated with that payment method. And then we analysed these results to try and understand what was leading people to prefer using cash. And to do this, we divided the survey population into two groups. So one group was those people that overall said that they would prefer to pay with cash. And then the other group is everyone else who said that overall they would prefer a digital payment means. And then we compared between those two groups what they saw as the benefits of using cash. Now, one thing you might notice is that in both groups, many people perceived privacy as a benefit of cash, but actually the difference between the two groups was not statistically significant. So we can't conclude that people want to stay with cash because it protects their privacy. In fact, the only difference where there was a statistically significant variation between the two groups was when it came to convenience, with people who prefer to pay with cash also being more likely to say that they found it to be convenient. So that might make you think, if only we could just make digital payments more convenient, then people would be happier to switch to digital payments and stop using cash. But actually, when we looked at the data, we found that people who said they prefer to pay with cash would be just as likely as anyone else to perceive digital payments as being convenient. And in fact, overall, in every group of people, no matter how you cut it, they generally perceive digital payments to be more convenient than cash payments. So what that led us to conclude is that actually to be adopted, any payment means has to be convenient. If it's inconvenient, people just won't use it. But convenience alone is not enough to encourage someone to make a switch, to make that transition. So actually, you have to find other incentives, whether that's cash back or more security or more privacy. Something else has to be added beyond convenience if you want to encourage people to make a switch to a different payment means. The other almost quite obvious finding, I think, is that what's convenient for one person is not the same as what's convenient for someone else. And you can certainly imagine that if you've got good digital knowledge and skills, then you'll find digital payments more convenient than if you don't have those skills. And also, for example, if someone is relying on a carer or a friend to go shopping for them, then they might find it very easy to give €10 to that person. Then they do the shopping, they come back and give them the change. It might feel much more scary to hand over a bank card or a mobile phone to them, and you might not have the skills to do it using an online transfer or another payment means to that person. We also asked in our survey how people felt about particular innovations in payments. So we asked them how they felt about their car automatically paying for fuel. We asked them about checkoutless stores, and we also asked them about this more futuristic scenario of their fridge automatically ordering and paying for food for them. Now, the first thing you'll notice here is that actually generally people were much happier with the idea of only using digital payments, so going fully cashless, than they were with any of these more innovative payment mechanisms. And what you'll also see is that as the scenarios become less familiar and more futuristic, people also become less comfortable with them. Another bit of analysis that we did specifically looking at checkoutless stores was, again, we divided our survey population into all those people who would be happy to only use digital payments and all of the people who wouldn't be happy to abandon cash. And then we compared how those two groups felt about checkoutless stores. And what you can see here is that those who would be comfortable with always using digital payments are also much more comfortable with the idea of a checkoutless store. And I think, if you think about this, it's quite logical, because if you're not yet comfortable with the idea of a digital payment transaction, then it's a huge jump. It's a massive leap to get to this idea that you just walk into a shop, grab something and walk out, which you have to remember, until very recently, that was literally a crime. That was stealing. So again, becoming more comfortable and familiar with digital ways of paying can actually help people become more comfortable with these other payment innovations as well. But that in itself has an implication, I think, for inclusion, because of course, if we see these sorts of innovations in how people shop and how they transact, and if people can only use those or will only be comfortable with them if they're already happy using digital payments, then those who are not willing to use digital payments now could become even more excluded from society than they are today. Now, there are many more findings in the report, and I haven't got time to cover them all here, but what I did want to briefly share with you is some of the conclusions we reached for what the payments industry can do to make digital payments more inclusive. So earlier, I talked about the fact that people who still prefer to use cash are also more likely to perceive it as convenient. And I also talked about the fact that what's convenient for one person is not necessarily convenient for another person. And what we see that the payments industry can do is try to provide more of the convenience of cash in digital payments. So, for example, providing an easy way to temporarily give someone, a friend or a carer, some money so that they can do some shopping for you, or providing an easier way to keep track of your budget. Because of course, one of the things that's really easy with cash is if you have 30 euros in your wallet, then you can't spend more than that. You can't get charged an overdraft fee or anything like that. The second conclusion is again related to convenience, and particularly when we're thinking about mobile payments. And there we saw two angles really. The first one is making sure that mobile payments don't require you to have the latest, most expensive phone, that they still work on low spec devices. And also that the application on the mobile phone is designed to be accessible. The second angle is actually looking beyond mobile payments, so to other ways of paying that could be more natural and more easy to use. So for example, this idea of pay by face, where you don't need any card, you don't need to remember a PIN, but just showing your face is enough to authorize and make a payment. But of course, even with a solution like that might be simple to use, there's often an enrollment step where you have to kind of register or enroll with that platform. And it's important, if people start rolling that out, that enrollment stays really accessible. So perhaps you can do it online or with your mobile phone, but you can also visit a shop or a bank branch and do it there with in-person assistance if that's something you need. And then the final point is really coming more to those other innovations like the checkoutless stores, where we think part of the key is having stepping stone solutions that help people gain trust in them and become comfortable using them. And I mean, that could be as simple, as you leave the shop, a green light comes on, but only if you've paid, just so that you have that comfort that you're not leaving the store having not paid for something that you've picked up. It could also include something like a digital or even a paper receipt for people, even if the rest of the payment experience is really frictionless or invisible. So now I'm really looking forward to moving on to the discussion with Karen and Oana. But before we do that, I did just want to let you know that if you want to read all the findings and all the conclusions, then you can download the report for free. You just visit worldline.com, click on Knowledge Hub and then Scientific Reports. Or in fact, actually, if you just Google Payments Digital Divide, I'm pretty sure it'll come up for you. And the other thing I wanted to let you know is that on our Navigating Digital Payments podcast, we've covered this topic of the Payments Digital Divide quite a few times. So you might be interested in listening to that. And you can access that by all the usual channels. So Spotify, Apple, Google, Amazon, whatever your preferred podcast listening platform is. So now, without further ado, I'd like to welcome Karen and Juana. Karen, thanks for joining us for this session.
Yeah, thanks for asking me to join to discuss a subject I'm really passionate about, so I'm looking forward to it.
Thank you so much. And also, Juana, thank you very much for joining the session too.
Thanks for having me, David.
So perhaps, Karen, I can come to you first. So one of the findings in our survey was that whilst the older generations were more likely to want to kind of use and keep using cash, actually there were small numbers in all of the generations that said that they would prefer to pay with cash. Do you have some thoughts or any views on what you think might be causing that?
Well, the first and foremost thing is ultimately private. Once you take the cash out of the machine, unlike an app, which can see if you spent it in Costa, Boots, bought some clothes or whatever, the cash is relatively anonymous, though those serial numbers aren't traced. So if you want ultimate anonymity, trade in cash. I know I've got some professorial colleagues who do that. They do not want to be tracked. So they use cash as a way to maintain privacy and autonomy to choose when and where they spend it. Alternatively, people might think, oh, it's for avoiding tax purposes, but I think predominantly choosing to use cash is where you just want to be free from tracking everything.
And that was interesting. That was, again, one of the findings we had was that everyone, whether they preferred to use cash or didn't prefer to use cash, privacy, I think, was the biggest perceived benefit of using cash across all groups that answered our questionnaire. I'm also interested, Karen, are there any kind of more surprising reasons or examples of people or people's reasons for preferring to use cash beyond privacy?
Again, the big word is trust. So a lot of people, I know through the research I've done around financial trust and looking at financial technologies, is it might be a generational thing, but I also think in the younger generations, it's that they don't trust whoever is overseeing the technology to do what's in their best interest. So I think trust is a key one. Maybe you find more in a generation sort of my age, 50 and over, where they don't trust digital technologies or the banks to do in their best interest. But yes, that's another one that's come out in our research. In terms of privacy, trust is an overlapping concepts with it to make sure that I want to trust and know that if I'm using machine learning or AI, that it's not going to be biased towards me. It's actually going to treat me equally and fairly. So I think, yeah, trust, privacy have an overlap that you can't totally remove from each other. But that's another main reason we found why people want to use cash as opposed to joining the digital era.
So it's a payment. I guess it's something they can understand. It's private, and as you say, they feel they can trust cash. And I guess it's interesting, isn't it, that with cash it's actually very simple. You hand the money over, and it's left you, and it's gone to the person that you've handed it to, and often you're then getting the goods immediately in exchange. Yeah. So I can understand.
And you're not going to get hacked unless somebody stands behind you and takes the money when you get it out of the cash machine. But you're not going to get hacked. You're not going to lose it. You can just make that straightforward transaction. You have the right to choose who you transact with, and there's no other third parties involved, which has been some of the issues in research and headlines that we've seen of late about third party uses of data when you are transacting in a digital environment.
And I guess, in our survey, we were looking at how do people prefer to pay, and clearly there are people who are choosing to pay with cash. But I guess the reality is that also some people just for whatever reason haven't got access to other ways to pay. So Juana, maybe I can come to you and get your view on what you think are the downsides if people don't have access to digital ways of paying.
Yeah, sure. Well, there's actually quite a few of them, but I could just mention but a few from what we see. For instance, here are the papers. First of all, I think not having access to the additional services and benefits when using digital payments. And here I mean things related to, I don't know, loyalty programs, rewards, cashback, and so on. And then another one would be maybe the lack of traceability of cash transaction, which actually makes all parties involved more and more vulnerable to fraud, and they cannot use, for instance, the data that comes with the transaction history. And another one I think would be the fact that cash won't help you, for instance, not only in the developed country but also in the emerging countries to build, but not only to build but to access credit. You cannot, when you're not using digital payments, when you're not performing digital payments, you cannot build credit history. And if we look, for instance, in the developed markets, at mobile application and digital payments, which don't require an account, can enable, for instance, the unbanked, the underbanked to maybe track their transactions and build credit history, which might help them at some point to access credit, to secure better loans, for instance, and so on. So I think those would be just a few things that we see.
That's interesting, Juana, because I suppose it's almost that anonymity, the privacy of cash, which is seen as a benefit, but in some ways that's also the downside, because with that privacy and anonymity, you don't build up a credit history. You can't prove what you've spent your money on over time. So it's kind of a double-edged sword, I guess, in that respect. And I guess understanding from you, Juana, some of the negatives and the downsides of not having access to digital payments. Maybe, Karen, I can come back to you because I know you've done research in this area. If there are some of these benefits to using digital payments, what are some of the reasons or the blocking points that actually prevent people from accessing them, mean they can only use cash in their day-to-day lives?
There's several reasons we've discussed before, and one of the reasons I'm so passionate is like someone like our parents who've got dementia, or somebody's got cognitive impairment, or they just don't have the skills or awareness how to access and benefit from the digital platforms that are out there. So I call those people, so we have a stage 1, stage 2 going on around the digital divide and data poverty. So if you're in stage 1, you might fall under what the FCA call the drivers of vulnerability. So you find yourself in a vulnerable situation because of like a health reason, a life event, capabilities and resilience. And I think combination, it's not just one, it's a combination of those factors that will cause you to not get the benefits of the digital era. At the same time, like I say, trust plays a massive part underneath all of those. So whilst even if they could access them, some people say, well, I also want the choice to say, I don't want to be tracked. And there are now websites where you can actually opt out of being tracked in certain, accessing certain websites, transactions that you're making to retain that privacy. So I think we have an issue where if we're going towards a cashless society and everybody's on digital, we have to make sure that it's accessible. And a lot of the apps just aren't accessible for everybody. And in our research, we've made a lot of points that if you get it right for somebody who's got dementia, that I've seen with my mum, or a carers app that can help control their spending, etc., and let them still have autonomy to do their day-to-day things while they're suffering for dementia, then that gets it right for a lot of the population. For instance, I've been approached by the Blind Veterans Association to say they have other issues about accessing online, as you would imagine. Also the deaf community, how do they access online in a digital era and make themselves understood without having to repeat this every time they want to engage online? So There are instances where there are benefits of the digital world, but we can't just rush ahead, I always say, without looking at the elephant in the room that some innovators forget about almost, that it's ethics by design, that we have got a hybrid system. And until we come up where we can include and make accessibility first and foremost, so that most people can use it, can understand it, and can understand the benefits that Oana and I have talked about. You can use some of these new technology to go, oh, I can actually manage my budget, I can save, I can get it taken out of the equation, so I don't even have to think about saving, I can invest, etc. I can pay people. But we have to, as humans, we have to allow people to have the choice. If they want to be traced, or you can turn this off. If they don't understand it, can somebody support them to do that, whether it's digitally or in person? But at the moment, while we're in this transition phase between two systems that are in operation, I think we have to be aware that it's not just about going, let's go digital. It's about the issues that are there that are perhaps not discussed too openly when you go to fintech events or innovation. It's just all about the digital.
Yeah, and I think you're very right to raise that of course, when it's natural for innovators to always want to rush forward and always start work on the next thing, the next big thing, the next big technology, the next big use cases. But again, it's something we touched on in the report, isn't it? That of course, the more people in society that do go digital and start living their lives in a digital way, potentially those that don't want to or can't board that train become even more excluded. There's less and less they can do without a phone or without internet access or without the skills to use digital technology. Maybe, Juan, I can come back to you then just to ask, are there any interesting initiatives or developments that you've been seeing in the market that you think can help make digital payments more accessible and more inclusive, as Karen was mentioning?
From what we see from the research that we do here on a daily basis, what we understand as being promising and actually being set to make a real impact on financial inclusion in the next couple of years, of course, would be the using biometrics, using face recognition, fingerprint, and I think this could facilitate actually financial and digital inclusion in the underdeveloped developing markets population, and perhaps might highlight the enabling policies and regulations in this market. So I think the use of biometrics might have an impact in boosting financial inclusion in the developing markets.
That's really interesting, Juana. And maybe I could ask you, Karen, a similar but slightly different question. So rather than perhaps so much what you're seeing now, what do you think has the potential to have the biggest impact on making digital payments more inclusive in the future?
I think we have to look at the use cases differently, because like touching on the biometrics, I'm not anti-technology. I work in that, I do machine learning and AI. But I think, as we know, many cases, the problem with facial recognition is that it's great when you're white like us, but if you're not, there's a real problem with the training that's been done on the AI. So I would like to see in the future that we do ethics by design, that we really get more diverse users involved in training of the data. So these mistakes, we're not just automating inequality, we learn from history and we push it forward. And like Juana says, there are rumours that is happening, but I have yet to see anything that really gets rid of that bias that we know it keeps occurring every time somebody tries to do biometrics, and particularly facial recognition. We've seen the stories in the press that this doesn't have a great outcome if you're not white. So we have a problem there, but I'm always hopeful and always optimistic that there are people working on these data sets to clean them, to actually understand we've made mistakes and push it forward. So I'm hopeful on the one hand that will that will actually open it up. On the other hand, again, given the current financial situation that we've got to talk about the expense of the devices that we're using now, the expense of the handheld devices when mortgages have gone up. Food is really expensive. Heating is also really expensive. And we can't forget that not everybody is in a position or on a salary that can actually afford this in the first instance. And we've seen the mini budget fail already this week. So I'm there to champion, well, what about the people who are really, on less than £20,000 a year, who are already paying poverty premiums in relation to their salary? This is the problem we've got to do. And what I would like to see is the innovators, as I did ask on a round table with someone who will be nameless, when was the last time you actually spoke to perhaps a single parent who is holding down 5 jobs, is still on universal credit, and how can we be inclusive for her, or male fathers in a similar situation? Let's look at the diversity and really get engaged with them. That's what I've been doing with the Astor Foundation, to understand, putting myself in a situation that I don't fully understand. I've never been there, so I don't know what the barriers are to inclusion for me. And that's what I'd like to see the innovators step up, not just go for, let's make something, let's make it successful, get investment and sell it and call it financial inclusion. Let's actually go back to maybe something that's purposeful, sounds twee, but purposeful, that will actually make a difference to financial inclusion. AI and machine learning, brilliant, yes, but we know that there are faults with facial recognition, biometrics, that much more work is needed, particularly around diversity, i.e. 50% of the population, like Awana and myself, might have difficulty with facial recognition and biometrics. So that's what I'd like to see.
And I think that's I know in the report we talked a bit about paying with your palm or paying with your face. And on the one hand, of course, that means there's no expensive device that people have to buy. You have to remember a PIN. There's lots of potential benefits. But as you say, if it then excludes a big segment of the population, clearly that is a big downside. But also, we discussed a bit that most of those systems, you have to have an enrollment step, where you link your bank account and you register your face. And if that's only something you can do online or with a phone, then you're still having the same exclusion issues that you have with mobile payments, say today. So as you say, it has to be, I think a recurring theme in this discussion is how technology can be part of the solution, but there's a danger that you actually bake in even more or entrench more the existing kind of inequalities that are there.
If I could just add that what has happened in myself liaising with a lot of computer science is we build it to what we know in our lived experience and what the move is. And Awana probably hears the same things with open banking, and a more positive outlook is that people are starting to go, we can't just build it in what we know. We have to broaden it out if we want to be truly inclusive. And like I say, that expense side, I think, is going to come more to the fore, because we are all facing increasing costs. Even on us on good incomes are going to struggle to pay mortgage, food and heating bills, as well as our device costs. So I definitely think, data and digital poverty is just another form of poverty. The social issues are still there. So if we really want to level up, we still have to address those underlying social issues of expense. How do we take everybody with us? So that, as you said before, it doesn't become bigger. We actually use the technology to go, we can actually push this down. And I think open banking is one possible solution that's pushing that way, that Awana mentioned earlier.
So I do want to thank you both for joining the session. It's been really interesting to get both of your different perspectives on this. I don't know if you have any closing thoughts that you'd like to add, perhaps coming to you first, Juana?
To Karen's point, I also think that the provision of support, first of all, in consumer education and digital literacy, would be some of the things that, first of all, would definitely are important precondition for technology to be successful for for people that don't have access to digital payments or don't even have access to an account. So yeah, I also think that these would be first of the first things to be solved, and then regulation, of course, is another thing. Yeah.
There's good points there that, of course, any technology is only successful if you bring people along with it, but also that, of course, this topic of financial inclusion is not a pure technology subject. I think that's, if that wasn't clear already, I think it's really worth making that point. And Karen, did you have any final remarks that you wanted to make?
I think just my always one, for me, it begins and ends with people, and tech is just an enabler. And I think we need far more research and collaboration between industry and academia to understand the position of the other. There's not enough research around that, and I've realised that in working with the Asta Foundation. So more of that, please.
Good. So thank you again. It feels like a privilege and a pleasure to have you both together discussing this important topic. So Karen, thank you very much for joining us.
Thanks for asking me.
And of course, Juana as well. Thank you so much for joining us for this session.
Thank you, David.
Great. And see you soon.